Mortgage Solutions. Materials provided by Genesis Financial Management. Life happens. Most people run into a financial situation that they were either underprepared for or not prepared for at all. These difficult financial situations can obviously wreak havoc on your life. If you're in over your head with monthly payments, sometimes reducing your largest bills like your mortgage can help you get through this challenging time. We're going to go over what options are available to reduce that mortgage. Common mortgage issues. The house value has dropped under the balance that is owed. This is also referred to as an upside-down mortgage or that your home is underwater. Your mortgage has an adjustable rate and the payment went up. Property taxes went up, causing your escrow to increase, which causes your monthly payment to increase. Property insurance went up, causing your escrow to increase, which causes your monthly payment to increase. Common reasons people fall behind: job loss or pay cut, illness, overwhelmed by unsecured debt, little to no emergency fund, divorce, legal issues, addition to the family, death of a spouse or family member, retirement. Interesting facts. Mortgage rates can change rapidly. Mortgage rates are subject to the market forces just like stocks and bonds. There was a subprime mortgage crisis during the recession of 2007 to 2009. It was attributed to the decline in property values and predatory lending. During this time, there were massive mortgage delinquencies and foreclosures. U.S. housing prices fell nearly 30% on average, and the U.S. stock market fell approximately 50% by early 2009. What to do when you're going to fall behind. Contact your lender. If you know you won't be able to make your mortgage payment on time, contact the lender before it is late. The lender may be able to push the due date to another date or even defer the payment if it's an emergency situation. Try to sell off any assets that you may have in order to stay current. Contact your unsecured creditors and see if they will be willing to postpone or reduce your payments while you're going through this financial hardship. Call a credit counseling organization so that they can go over a budget and see what areas you can improve upon. More permanent solutions. We're going to go over the following methods in resolving mortgage issues: refinance, loan modification, short sale, deed in lieu of foreclosure, bankruptcy, and foreclosure. Refinancing your home. When you refinance your home, you're essentially replacing your current loan with a completely new loan. So you're starting over, but at different terms than what you originally started with. There are pros and cons to refinancing your home. Pros: monthly payment reduction, interest rate reduction, term reduction, cash in the value of equity, fresh start. Doesn't negatively affect your credit report. Cons: refinancing equals closing costs, which can be expensive. If your home is underwater, in most cases you wouldn't qualify for a refi. Starting over can mean starting the term over, which means it'll take you more time to pay off your home. In some cases, you'll have to pay a prepayment penalty. You have to have good credit or you will be denied. Tips to refinancing. Make sure before you start the process of refinancing to pull your credit report to make sure that there aren't any errors. Pay off or reduce your credit cards to improve your score if possible. Contact a mortgage broker or lender directly to see if and what you qualify for. Get more than one quote to better weigh your options. Review the loan documents thoroughly before signing them. Ensure that the broker or processor goes through all of the fees with you before you agree to anything. Question any fees that don't make sense to you. At closing, read the documents to verify that they match the documents you were previously presented. Loan modification. A loan modification is a temporary or permanent restructuring of the terms for your mortgage. Typically, this is done to provide the borrower with some financial relief by reducing the payment and interest. In some cases, this is the only option that can be taken to save a person's home. Pros and cons. Pros: no closing costs. Interest will be fixed. Payments will be reduced. Once modified, your mortgage will go to current standing. Late fees can be added to the balance. Some modifications will reduce the balance to the current home value. It can stop or prevent the process of foreclosure. Cons: the process can take several weeks to months. Sometimes it's temporary. You may have to pay for an appraisal. Some lenders will deny you a modification. You may have to resort to hiring an attorney to assist you. You will have to provide the lender a lot of documentation to show your hardship. loan modifications can be very difficult to obtain. Tips for loan modification. Contact your lender as soon as you know you're going to fall behind and ask them if you qualify for a loan modification. Be prepared with your financial information. They will most likely want to go over a budget and request that you send them income and debt information to prove your financial hardship. If the lender refuses to assist you, go on to www.makinghomeaffordable.com to see what options are available through the federal government. You can also go through www.harp.gov to see what you qualify for there. Go to www.hud.gov. There's a substantial amount of information in regards to what to expect out of the loan modification process. If all else fails, contact a loan modification attorney for assistance with this matter. Short sale. A short sale occurs when the borrower sells a property for less than the full value of the mortgage when he or she can no longer afford the payment. The mortgage lender must agree to the short sale. Pros. You avoid foreclosure. It's better for your credit than continuing to default or foreclose. Unburdening yourself from a tremendous amount of debt. Cons. It negatively affects your credit report. The short sale can take a considerable amount of time because a mortgage lender will need to approve it. You'll have to hire a realtor or a real estate attorney and may have to pay closing costs. You may still be responsible for the deficiency balance. The bank may 1099 for the loss that they incurred. And it may be difficult to find a buyer because it is a very lengthy process and sometimes buyers don't want to wait that long. Tips for short selling. Hire a realtor or real estate attorney that specializes in short sales. Be prepared to provide a substantial amount of documentation in order to get the process moving as swiftly as possible. Your real estate attorney or realtor will let you know what documents you will need. Make sure that you reply to all lenders' requests and needs as soon as possible. Be patient. Short selling your home can take several months. Deed in lieu of foreclosure. A deed in lieu of foreclosure means that the borrower has signed over the deed to the mortgage lender instead of going through the arduous process of foreclosure. The lender will satisfy the defaulted loan in order to avoid the time and money it takes to foreclose on the property. Pros. Avoid foreclosure. May eliminate all mortgage debt. May be eligible for $3,000 relocation assistance. Better for your credit than a foreclosure. Eligible for a mortgage in 2 years. Cons. Loss of property. Loss of investment in the property. May be taxed on the deficiency balance. Tips for the deed in lieu of foreclosure process. Get a free consultation from a foreclosure attorney. Contact the lender to inform them of your intentions and give them the attorney's contact information. Ask the lender to forgive the deficiency and to report the deed in lieu of foreclosure as a paid settlement or satisfied. Be prepared to submit documentation to the lender. Bankruptcy. If your mortgage lender is about to foreclose on your home, filing an emergency bankruptcy petition, also called a bare bones or skeletal petition, can delay or stop the foreclosure process and give you more time to negotiate with the bank. Pros. An automatic stay goes into effect, preventing the lender from moving forward with the foreclosure process. It gives you additional time to work with the lender. It stops the collection calls immediately. You may be able to change the repayment terms through a Chapter 13. Cons. The lender can file a motion to lift the automatic stay. It negatively affects your credit report. It's not guaranteed to save your home. Bankruptcy attorneys can be very expensive. Tips for bankruptcy. Pull your credit report, and if there are any truncated account numbers, make sure to look for them and write them all down in a spreadsheet. Your attorney will need this information. If any of the debt was sent to collections, contact the collection agency and verify that the debt is still with them. Advise them of your intention to proceed with bankruptcy. Find a qualified attorney that specializes in bankruptcy. Be prepared to attend court hearings and meetings with the U.S. trustee. Foreclosure. Foreclosure is the process of taking possession of a mortgaged property as a result of the mortgager's failure to satisfy the monthly payments. Pros. You no longer have to make monthly payments on the property. You can live in the house for several months without payment, which can allow you opportunity to try and save money for relocation. Cons. You lose your home. It negatively impacts your credit report. You may be responsible for a deficiency balance. You will not be eligible to purchase a new home for several years. You will lose any investment or equity in the home. Tips for the foreclosure process. Make sure to begin searching for your future home as soon as you get the foreclosure notice, because you may find it difficult to rent with a foreclosure on your credit report. Ask for relocation assistance. Sometimes the lender will provide some form of monetary relocation assistance. Do not overstay the foreclosure date or you will be forcibly removed from the property. In summary, although we all at some point experience financial difficulties, know that there are options that may offer relief. We always encourage you to inform yourself and to always be open and honest with your lenders or creditors when you're going through any type of financial hardship. That sometimes will be the biggest favor that you can do for yourself because they may directly offer you assistance and choices that you never even considered. Questions, overwhelmed, need help? If you're struggling with any financial issues and want to speak with one of our certified personal finance counselors, please do not hesitate to call us at 877-202-9246 or visit us at www.yourgfm.org.